All right, good morning traders. Today is December 23rd, 2025. My name, Coach Carignan. I'm the lead instructor here at the BYOB Trading Room. That's the day trading division of the Hit and Run Candlestick family. Thank you so much for being here. Thank you, everybody. Podcast Land, Digital Land, Cyberland. Thank you for following my content. Thank you for subscribing to my content. Special shout out, John Jordan, Bob Jordan, Kathy, Sarah, Roasted. Thank you for sharing the content, helping get the word out there, helping to grow the community. Thank you so much. I appreciate that. Let's take a look at the markets this morning. All right. First, tomorrow. Okay. The trading room says they're going to be closed. They're probably going to be open, but there won't be any moderators in there. Okay. So same with Christmas Day and Friday after Christmas, as well as Saturday and Sunday as normal. Wednesday, New Year's Eve, as well as New Year's Day and the Friday after, as well as Saturday and Sunday. Trading rooms says they're going to be closed. They'll probably be open, but there won't be anybody in there. Okay, just let you know that those are our hours for the holiday season. And want to go out there, we want to wish everybody happy holidays. I don't care what holiday you celebrate. We wish you all happy holidays throughout the season. All right, let's take a look at the markets this morning. All right, so my SPY pivot. 680, 682.60, above it on bull, below it on bear. Silver and gold made new all-time highs. IWM, SPY, QQQ, and Diamond Dow made higher lows and higher highs, closing over their traps and over their 17 EMAs. FNGU made a higher low and a higher high, closing inside a bearish trap under the 17 EMA. SPY closed with a 2-hour uptrend and a 10-minute bullish consolidation. USO in a daily downtrend made a higher low and a higher high, fighting off that downtrend, closing over a bullish cross and over a falling 17 EMA. Nice work there. UNG in a daily downtrend made a new all-time low yesterday. U.S. dollar index in a downtrend closed near the 98.25 area. SPY max paying 684 with a put-to-call ratio of about 1.2 puts for each call that expires today. Remember, those index options expire 4:15. Security options expire at 4 p.m. Now, if this is your first time, these are all in daily uptrends here. Over the 17 EMA, okay? If they are have a little star next to them, means they're building on a bull flag, all right? Or I call it a launch pad from which you launch higher. There's no promises that they're going to launch higher. They're just building on a bull flag. If they're over here, they're in a daily downtrend under the 17 EMA. If they have a little star next to them, means they're probably building out a bear flag, or I call it a platform from which to dive lower. So we'll see what happens. But again, no promises, but they're building out bear flags. So these are in daily uptrends over the 17 EMA, daily downtrends under the 17 EMA. Let's go take a look at the markets. All right, so you can see here, SPY, yesterday was 22nd. Can't get a gap up. All right, and look how the bulls held the gap all day long. Okay, so the bears never filled the gap. That is fantastic news. The bears were not strong enough to push the gap down up at these levels. In the past, they have been able to push price down, but the bulls held the gap open all day. Nice work on the bulls' part. So you can see here some price action on the 10-minute chart. Really no uptrend or downtrend. I'm just going to call it bullish consolidation. And look at price holding those highs. You guys know that is one of my favorite things to see is when price moves up and holds that higher ground. Okay, they continue with this. I would suspect we get another measured move up even higher. All right. So that's 10-minute chart. I'm going to call it again, no downtrend, no uptrend, just bullish consolidation. So nice work on the bulls part yesterday, nice gap up, all right, and then hold, and then a little ride up. Wasn't much to trade. Most of the money or the profits that were made for me yesterday came from positions that were held on Friday when price gapped up. Just started taking profit in those, as well as into this rally back up here, into these highs, 685. So you can see 685 was pretty much our high yesterday. And you look, the all-time high is probably pretty close to 690. So you can see here's the 10-day moving average. We are within striking distance of that all-time high. So I would suspect we either hit one today or tomorrow. All right, we'll see what happens. No guarantees, no promises, but market's bullish. Market's on fire. Gold hit a new all-time high. Silver hit a new all-time high. And you saw that SPY, QQQ, Diamond Dow, and IWM all closed over their traps and over their 17 EMAs. That's huge. All right, the market is incredibly bullish on these days, these holidays season right now. So let's take a look at the 2-hour chart. Get your candlesticks riding up on top of the 3 EMA. 3 EMA is the yellow line right here. You can see it come down, cross over, catch, and you get the candlesticks riding on top of the 3 EMA. Candlesticks in the 3 are riding over the 8 EMA. Both are pointed up. Both are riding on top of the rising 17 EMA. That's the green dots. See how the red dots turn to green, and now they're both rising up off of this VWAP line. And VWAP, I'm pretty sure that's the all-time high in VWAP. Is that purple line? So we're up over that purple all-time high in VWAP. Now my favorite trade is a 10-minute uptrend that resides inside the 2-hour uptrend, that lives inside of the daily uptrend, inside of the weekly uptrend, inside of the monthly uptrend. Right now, we have all of the conditions for my favorite trade. Okay, that is 10-minute uptrend. All we need is a 10-minute uptrend. It's a 10-minute uptrend inside the 2-hour. We have the 2-hour. Let's take a look at the daily. All right, here's the daily. All right, got the higher low, higher high. Notice we closed over the trap. Okay, or over the cross, over the 17. That's the green dots right there. So we're over the 17. We're over the all-time high anchored VWAP. Okay, you can see this is the all-time high right here. Okay, so we were up over the all-time high anchored VWAP right there. That's the purple line. So everything is bullish right here. We're at the top of quadrant 4. Okay, for me, anything in the upper third of the quadrant lines is bullish. So we're bullish up here top of quadrant 4. Here's our April low. We're bullish, and we're in an uptrend. Okay, we haven't made any lower lows. Price would have to come back down here and take out this low to get into a downtrend. Okay, so there's SPY on the daily chart. Daily uptrend. Weekly chart. See all the green dots? Top of quadrant 4. April low. Okay, we're bullish and in an uptrend. Okay, we haven't broken any lows. We'd have to break this low down here in order to get ourselves into a downtrend. Okay, so there's SPY on the weekly chart. Monthly chart. See all the green dots? We're at the top of quadrant 4. That's bullish, and we're in an uptrend. Okay, on the monthly. So you can see we're in the uptrends on the 2-hour, the daily, the weekly, and the monthly. So when I trade a 10-minute uptrend, okay, I'm going to have the support of all of the bigger time frames helping push that 10-minute trend higher and making it last longer. That's why I like that trade. And on top of all of that, we are up over, again, the all-time high anchored VWAP. So again, we're very close. We are in striking distance of those all-time highs. They could be coming to us soon, sometime today. We'll see what happens. We're going to need some help out of the FNGU. Anyway, let's go take a look at the game plan this morning. We'll start off down here, and we have green erases red entry, okay? Up over 685.40, that was our highs yesterday. Pivot 682.60, above a number bull, below a number bear. Okay, red erases green, underneath 680.10, okay? That would be a bearish entry below that area right there. Okay, so I like 10-minute uptrends. I like 10-minute downtrends. I like 10-minute uptrends over VWAP. I like 10-minute downtrends under VWAP. If a 10-minute uptrend were to manifest down here, long before it gets to the green erases red entry up here, okay, I'm not opposed to trading it as long as it breaks that bullish 10-minute rubber band candle. Again, if a 10-minute downtrend were to manifest up here or up here, I'm not opposed to trading the 10-minute downtrend. I like to see it break that 10-minute bearish rubber band candle so that I can see the price probably has a good possibility, a probability of flushing lower. Okay, so that's our game plan this morning. Okay, I like 3 days and 10 days till expiration Friday options on the multiple of 5, specifically for the open interest. Higher open interest usually equates to higher liquidity. Higher liquidity usually equates to a tighter bid-ask spread. All right? I don't want a lot of slippage when I have to get stopped out. And then I like a nice tight bid-ask spread because I want to be able to get in and get out very easily. All right? I like strikes that are $2 to $15 out of the money. All right, I'm not going to get the performance that I would from a strike that's in the money. But just remember, I will be paying a lot less than someone that pays in the money. So I'm willing to give up some of that performance just to take on a little less risk. Okay, you can see currently we're showing a bullish inverse head and shoulders right now on this 15-minute chart. That would be the head. This would be the right shoulder right here. This would be left shoulder right here. You can see there's a neckline break yesterday. Okay, price came down here. We broke the neckline. Okay, you can see now price is moving up. Okay, we needed to make the higher high. Notice when we on Friday, we did not make the higher high. See, there's the high right here at the neckline. We didn't make it that day on the 18th. We didn't make it on the 18th again. We didn't make it on the 19th. We did not make a significant higher high on the 19th. So yesterday was fantastic news. Seeing price gap up and hold that higher ground. That was really bullish news. That was well waited for, a long time for price to break. So now we've got an inverse. That would be a bullish head and shoulders pattern showing up right here. So we're looking for price to come up here, challenge this high, hopefully make some new all-time highs. So there's our SPY game plan this morning. Currently, we're holding the higher ground. Okay? For me, whenever I get a bull flag, I like to trade the bull flags in a direction of, let's see if my drawing tools are going to work this morning. Let's see what happens. Let's go ahead and draw a box first. Let's see if the box is going to work. No. Not going to work. All right, so we'll fix that. Let me just get this... working now. Okay. All right. So this would be my bull flag. All right. So I'll draw in my bull flag. Okay. So price moves up and then flags over to the right, just like that. Now for me, I like to trade my bull flags from the bottom to the top. So from the bottom up to the top up here. Okay. From the bottom up to the top. And every time I get up to the top, I hold a little bit more, but I always take some profit up here. Trading from the bottom up to the top. So for me, up to the bottom to the top, to the bottom to the top. Okay, price comes back here, bottom back up to the top. That's how I trade my bull flags. Okay, if they break below this low, then it's over. It's broken. All right, I will be looking for a trade back down to gap fill down there. Okay, so that's how I trade my bull flags. All right, same thing. It goes on the reverse for bear flags from top to the bottom. From the top to the bottom. Okay, so there's SPY on the 15-minute chart. Let's take. You got the game plan already. All right. Again, I trade strikes $2 to $15 out of the money. Like I said, I'm not going to get the performance of somebody that has in the money options. All right. But when you have an in the money option, you will pay up for that. Okay. But you will get better performance. All right. But if you get one of these red candle bars right here, that's like $2 or $3. All right, you've got 10 contracts. All right, rest assured, there goes. That's going to make $2,000 or $3,000 disappear out of your account. So be careful when you trade those in the money options. Okay, my preferable price for my contracts is somewhere between 30 cents and $1.40. All right. Any more than that, then I'd rather just roll out and get something a little bit cheaper. All right. I don't like to have a lot of risk in my trade. Remember, my options are directional. They can only go to zero. All right. So I'm looking for not as close to zero, but I want somewhere in the middle, like 30 cents up to $1.40. That's my favorite price point when I trade my directional options for SPY and QQQ. All right, so there's SPY. Let's take a look at QQQ. They got a game plan as well. All right, on QQQ, again, I trade 3 days and 10 days till expiration Friday options on the multiple of 5 again, specifically for the open interest. I like tight bid-ask spread. I like a lot of liquidity. I want to be able to get in, get out. I don't want a lot of slippage when I get stopped out. I like strikes $2 to $15 out of the money. Same thing. All right. My favorite price point for QQQ strikes are calls or puts. All right. Again, 30 cents per share, right on up to $1.40. Any more than that, it's a little rich for me. I've only got 10% to trade with in my account, so I'm not. I got more to trade, but I'm only trading 10% of my account. So my trading account value is 106,389. My max risk 10,639. My daily goal is always 1%. My max risk is always 10%. Okay, so my daily goal 1%. So I got to make 1,064 today. Okay, that's my daily goal. All right, so QQQ. I like 10-minute uptrends over VWAP, just like SPY. I like 10-minute downtrends under VWAP, just like SPY. Okay, I got green erases, red entry up here over that high, 621.65. Pivot 617.70. Above it, I'm a bull. Below it, I'm a bear. Okay, red erases, green entry under 614.24. Again, bullish gap up, and look at the bulls hold the gap open. The bears were never able to fill that gap. Another bullish gap up the day before, that would be Friday. Look at this, bullish gap up, and the bears never filled that gap. This is a sign that the bulls are in charge. Look at the 18th, okay, day before Friday. Okay, bullish gap up, bears never filled that gap. Okay, so I don't know if the bears have left the building, but everything is looking good for the bulls so far. Okay, I like the idea that the price moves up, holds that higher ground. For a day trader, it's not very fun because you want movement and momentum. All right, you don't want to go straight into a 6-hour hold. Okay, that's not very easy to make profits when you go price goes gaps up and moves right into a 6-hour hold. There's very little room to make profit. All you can do is hope for tomorrow for another gap up. All right, that's probably the best you can do. All right, you can see, although it is good for trading spreads, but you never know if price is going to take off. This hour or the next hour or what hour it's going to finally take off at. So it makes it very, very difficult. I like directional with nice uptrends where the 3 EMA and the 8 EMA are both pointed up and they're both rising up over that 17. Okay, so there's QQQ. There's the game plan there. All right, we're going to take a look at the 10-minute chart. Okay, you can see 10-minute bullish consolidation. Okay, I'm not going to call it an uptrend or a downtrend. You can see neither one of these is pointed down or up. So that's bullish consolidation. See the gap up? Price holds over the gap fill line right there. So that's bullish consolidation. Again, you've got consolidation over prior consolidation. Okay, that's a bullish environment. All right, anytime you see consolidation over prior consolidation, that's bullish. All right, I'd be looking for another bullish move to follow that. Okay, unless of course they break down, but that is a bullish environment. Every time I see that consolidation, so that's my bias this morning is bullish until they show me that they're not. All right, so that would be a gap fill or erase this consolidation through here. Breaking below that consolidation would show me that, oh, they're not as bullish as they kind of showed me earlier. Okay, so currently consolidation over prior consolidation, bullish environment. Same thing for SPY. Okay, again, you've got consolidation, all right, up here, up over prior consolidation. Right through here. Okay, all of that. We probably brace this down, probably drag this down to here. Okay, so consolidation over prior consolidation. Again, that's a bullish environment. All right, let's go back to QQQ. We'll look at the 2-hour chart. Okay, QQQ, let's take a look at the 2-hour chart. Now you can see on the 2-hour chart, I'm going to remove these. Okay, you've got the candlesticks riding over the 3. That's the yellow line. Okay, candlesticks in the 3 are riding over the rising 8. See the 8 rising up from the bottom. Okay, and all 3 of them are riding over the 17. That's those green dots that are rising up from the bottom there. So we have a 2-hour uptrend, 10-minute bullish consolidation, daily chart. Higher low, higher high, closing over a trap, over the 17, over the all-time high anchored VWAP, at the top or near the top of quadrant 4. That's bullish. April low right here, bullish and in an uptrend. Okay, if we take out this low, all right, we will no longer have an uptrend. We will negate the uptrend and convert the downtrend, taking out this low down here. Okay. So there's QQQ, daily chart. That's bullish and in an uptrend. Weekly chart, see the green dots, bullish and in an uptrend. Monthly chart, bullish and in an uptrend. Okay, let's take a look at IWM. We'll look at this on the daily chart. Okay, so for IWM, we've got a higher low and a higher high closing over a bullish cross over the all-time high anchor VWAP right there. Okay, top of quadrant 4, that's bullish. Here's the April low. Bullish and in an uptrend. Nothing's broken yet. Okay, let's take a look at Diamond Dow. Okay, price action for Diamond Dow. Higher low, higher high, closing over that bullish cross. Okay, closing over. Rising 17, closing over. Looks like that all-time high anchored VWAP, just barely up over there. Okay, so there's daily chart for Diamond Dow. Okay, that's bullish, top of quadrant 4. Okay, remember everything in the upper third. All right, is bullish, lower third's bearish, bullish, nothing's broken, no downtrend created yet. They'd have to come all the way down here to create a downtrend. Okay, bullish and in an uptrend. That's the daily chart. Okay, let's take a look at FNGU. All right, FNGU has been the stinker in the mess here. Okay, FNGU, while the others are showing a bullish head and shoulders, or a bullish inverse head and shoulders, FNGU is showing us a bearish head and shoulders right here. So this would be the head. You can see almost the neckline's almost broken here. This would be major support. All of this consolidation through here. Okay, this would be the major support line. We have broken major support. Okay, not a good sign. We're running into another level of support. If we get through this, not going to be good for the market. If we get below this, all right. But we'll see what happens. All right. Right now, things seem to be turning around. Here's yesterday's candle on the daily chart: higher low, higher high, closing in a bearish trap under the falling 17. And you can see the pink line, we're under the all-time high in your VWAP. Again, this is the major support, this top green line right here. Okay, I could probably turn that to be red. Let's move that to red. Okay, that's a major support line, that red line right there. Okay, so getting below that, that's not good. All right, maybe the bulls will recover it. Last time they came in and rescued price. We'll see if they want to do it again. All right, so that's FNGU on the daily chart, not looking good. This is 10 of the most heavily weighted securities in the QQQ and the SPY. All right, when they move as a pack, they can drag those indexes right along with them. They have a lot of power. All right, they have these 10 have probably as much power as the other 90 within the NASDAQ 100. These 10 have as much power as probably sometimes as much as the other 490 in the S&P 500. Okay, so when these 10 get to moving as in a pack of dogs in the same direction, okay, they can drag those indexes right along with them. All right, so we don't need these to get bearish. All right, and they are already bearish. And in a downtrend, they're neutral and in a downtrend. Today's candle closed not in the upper third, so it's just neutral in here, neutral, and it's in a downtrend still. We haven't made any higher highs yet. There's a low. We made a lower low, so we're still stuck in that downtrend. Good news, past 3 days we've been moving up. Not a very convincing move up, though. All right, not very convincing at all. There's FNGU on the daily chart. All right, let's take a look at silver and gold. Silver, okay, new all-time high. All right, doesn't get any better than that. Okay, new all-time high. Origin starts back here, 2022. New all-time high for silver. So that's bullish in an uptrend. Gold, same deal. All right, there's the prior high, new all-time high up there. Okay, top of quadrant 4. That's bullish and in an uptrend. Here's the origin for that back in 2022, right there for the gold. So gold and silver making new all-time highs. All right, let's take a look at UNG. Okay, UNG, this was the all-time low made in October. Well, they went out yesterday, made a new all-time low. So lower high, lower low, closing underneath a bearish trap, underneath the falling 17. Okay, at the bottom of quadrant 1. Okay, that is, there's a high, there's a low, there's a lower low. That puts us in a downtrend. So that's bearish in the lower third and in a downtrend for UNG. Okay, so not very good for UNG. Those bottom pickers out here, that's maybe your time soon. We'll see what happens. Let's take a look at USO. USO got a higher low and a higher high, closing over a bullish cross and over that falling 17. Nice work on USO. No uptrend yet. There's a low. They made a lower low, so that puts them in a downtrend. They're not in the lower third of the quad lines. Okay, this would be below this line here. Would be a downtrend, or excuse me, bearish. But price action is neutral and in a downtrend still. Okay, so you can see price action still hanging out below this line right through here. Okay, so we've got to break that downtrend line. So there's USO, technicals, T2101. Okay, the market moved up yesterday. This is T2101, and guess what happened? we lost participation. Market breadth, aka participation, decreased. Not something you want to see. You want to see more participation when the market moves higher. Seems like sentiment feels like markets at the all-time high. That's kind of what makes me believe if we're not getting very much participation, it means the market feels like it's overbought at this time. So we'll see. That's T2101. T2122, we spent the day in the buy zone all day yesterday. Nice work, making little micro lower highs and lower lows. Ending the day in the buy zone up here. Nice news is we got a high, another high. We made a higher high, okay, but we didn't hold those highs. But we still held the buy zone area, so that's good news for T2122. That's bullish. Okay, we got a low, we made a higher low, and we made a higher high. So that is bullish, T2122. T2123, we got a consolidation breakout. You can see price consolidating up here. Price breaking out. So we're in an uptrend. Got a high, we made a higher high, so we're in an uptrend on the 15-minute chart. That's a bullish. Look at the bullish hold right there. Up over that 200, that rising 200 SMA. That's bullish and in an uptrend on the 15-minute chart. Okay, let's take a look at the 3-bar chart. And zoom way out. Okay, here's our April low. Here's our all-time high, way up here. Okay, price pulls back to, see this head and shoulders neckline? That would be the upper third. That's bullish up there in the upper third. Okay, so price action bounces off this neckline right here. That's the support line for that head and shoulders. Bounces off there, and we finally make a higher high. There's a high there. We made a higher high. So now that puts us in on an uptrend. We're up over the 200 SMA. That's bullish. And I like the fact that we're breaking out today. Hopefully we get a continuation on that breakout. All right, a little bit more. Would hate to see the bears come in and pull us back down. We'll see what happens. So that's bullish and an uptrend. T2123, 3-bar chart. You're showing an inverse head and shoulders. That would be left shoulder, right shoulder. And then we've got a neckline that kind of runs right through here. Okay, if we can break that neckline, we could probably start seeing some new all-time highs. That is the all-time high, or at least a challenge of that new all-time high area, that recent all-time high area up there. So we'll see what happens, all right? T2123 looking good so far. FNGU, this is the one that's not helping us. Good news is yesterday they gapped up. Bad news is the bears filled the gap, okay? Price was not able, at the close yesterday, price was not able to transition over that falling 200 in the overnight pre-market, post-market action. You can see we did transition over it. Question is, when we open up in the open market this morning, are they going to be able to hold it up over that falling 200 SMA? We'll see. We won't know till sometime today, later today. We want to see them hold it up there for at least 4 hours, okay, over this 200 SMA downtrend right there. Okay, so that's FNGU, all right? They're in a 15-minute uptrend, being since they've made higher lows and higher highs, okay? They're holding this higher ground so far. It's not a very convincing hold, but they are holding it. Not looking healthy enough. That's all I'm going to say. Not really looking healthy enough. But if they can continue just melting up, I'm all for it. All right, so that's FNGU, 15-minute uptrend. I don't know how long it's going to last. We're under the 200 SMA yesterday. Okay, not my favorite place to be unless I'm a bear, and I'm not a bear. So you can see there's price action right there. Again, the red line, okay, the all-time high anchored VWAP, we're below it. The major support, which is the red line, we're underneath it. The wavy 200 SMA right here, this red line here, underneath that. So all in all, a lot of all these indicators here showing me that we're not in favorable conditions for bullish activity. But if the bulls could melt this up, all right, we might have a chance. That's FNGU on the 15-minute chart. All right, let's go take a look at the economic package. And on the dollar, we have a downtrend. Okay, this is the 2025 high. Comes down, transitions into a lateral move to the right. Big sloppy lateral move in a bear flag. Currently, in this bear flag, we have a double top high up here. All right, below, made a lower low, a lower high, another lower low, another lower high. So we're in a daily downtrend on the dollar. Now, for the consumer and us, okay, a weak dollar means higher prices for goods and services. So it sucks to have a weak dollar as a consumer. But for the investor, all right, that's bullish, all right, because it makes our goods and services more affordable or competitive overseas, all right, so that's bullish. So we like a weak dollar as an investor or a trader, all right, because it makes the market go higher. All right, so there's U.S. dollar in a downtrend. We like that. Max pain for today, 684. Put to call ratio, again, 1.2 puts for each call that expires today. At 4:15 for SPY. Remember, those security options expire at 4 p.m. Index at 4:15. Okay, so economic calendar for today. All right, we got to get a delayed report on durable good orders at 8:30, so it's already out. Delayed report. Oh, it's not the delayed. We're going to get the regular GDP, okay, report. I thought it said delayed yesterday. Regular GDP report comes out at 8:30 today. That should be interesting. All right, that U.S. dollar, all right, is what makes our goods and services more competitive. All right, being since the dollar is weak or in a bear flag right now, we should get some good GDP numbers. We'll see. Corporate profits, 8:30 today. Industrial production, delayed report, 9:15. Consumer confidence at 10 a.m. And new home sales also at 10 a.m. So Alan shared some GDP. I just want to look at it. Quarter over quarter, annual rate. Wow, 4.3. Consensus range was 2.5 to 3.8. Quarter over quarter, we just ripped a GDP number of 4.3. Traders, that's huge. All right? Anytime you're over 4, that is huge. Now, I don't know how much of that is tariffs, but I'm just going to say 4.3% for GDP quarter over quarter. That's incredibly huge. Personal consumption and expenditures did increase as well, but that's, that kind of goes with the GDP as well. So, wow, big rip there on quarter over quarter annual rate GDP. That means the nation's taking in more money than it did yesterday. Okay, so big numbers there. So I imagine the market ripped on that. Durable good orders. Consensus was minus 4.5 to 6. We were inside the consensus with a minus 2.2. X transportation minus 1 to positive 0.4. We were at a positive 0.2, so we're inside the consensus there. So, but nice move there on the market on GDP. Earnings. Okay, nothing but familiar names, but nothing here that's going to move the markets. Okay, same thing Wednesday, that'll be Christmas Eve. Christmas Day. Again, nothing here that's going to move the markets, just a lot of familiar names all this week. So nothing here on the economic calendar that's going to rip the market apart. Economically, GDP, that was huge. So I don't know if the market's ripping this morning, but we are in a well over a 4-hour bull flag. So I would not doubt it if the market did spike this morning. So we'll go back and take a look at that right now on SPY. On the 10-minute, and let's take a look over here on this one. Oh, they're coming down. I don't know why they're coming down. Those were awesome numbers. So except for personal consumptions, that was not good. All right, but anyways, looking for price. If they break below this area here, I'm bearish. All right, currently, to me that looks like an exhaustion candle. I would look for price to come back up here and trade over 685.29. It may not. All right. I would expect price to rally, but doesn't mean that it's going to. It doesn't mean that it has to. Okay. So again, breaking these lows right here, all right, would put me in a downtrend, and I would be looking for gap fill for yesterday if we break those lows right there. Okay, so from this low up to that high, put the quad lines on there. Okay, so again, I would not want to break those lows right there. That third area, see that upper third of the move? Would not want to break that. Want to stay consistent up there. Now, if they do get below this area here, I would be looking for gap fill. Right now, I would not trust that candle as a down move until they get down here and start breaking below all of yesterday's consolidation. Okay, so there's SPY on the 15-minute. I would also be looking for price to rip in the other direction, right over the top of those two candles right there. Okay, up over that, I would be highly interested in a breakout to the upside over 685. We'll see what happens. That would be my trade this morning. Again, map out the first 15 minutes and look for a breakout on SPY and QQQ. Remember, sentiment, big bullish sentiment. Remember, they could not fill the gap yesterday. We gapped up. All right, so that was bullish. So my bias is still bullish. Okay, we have not broken anything yet. We haven't taken out this low. We haven't broken 10-minute bearish rubber band candle. So I'm still bullish right now until we get below, again, see that tail candle, until we get below that tail candle. Then I'd be looking for gap fill. Until then, I'm still bullish, all right? I think this is nothing more than an exhaustion candle, and I think we turn around and head back in the other direction. All right, that's it for me, traders. I'll see you all in about 30 minutes, and we'll kick off the markets again, okay? Again, I'm still bullish. I don't know why that's there. To me, that looks like an exhaustion candle or the first part of the move of something that's going to go higher. Yeah, thanks. Thank you, traders. I'll see you all in about 35, 40 minutes. We'll open up the markets.